everybody. Welcome to the Daily Plan. I'm your boss, Joe Boss. Another day, another round of U.S. economic information coming out in about 30 minutes from now. Let's go ahead and hop into these charts, see what's currently going on. Yeah. We had Eurodollar come down to this peak right here on the week. US equities are currently green. Global equities are green right now. Seeing some nice bullish movement on the yield spreads here. Some sideways action on the New Zealand dollar. Yeah, we did not necessarily get the follow-through from yesterday's preliminary PCE numbers, but today we're also getting PCE numbers, the final. Let's go ahead and check out the yield spreads here on the euro. Positive development short term. Kind of looks a bit choppy, intermediate. We'll see how that develops. Looking at the USD CAD here. Bit of a dollar strengthening there. Again, short-term yield spreads seem to be improving for risk on going into the economic releases today. Yeah, dollar yen has a lot of great commentary around it still. Cool shirt, yeah. I wore this 2 or 3 days ago. I've washed it, now I'm wearing it again. It's one of the nice shirts I got. Try and dress up for you guys. Let's go ahead and check out the dollar. Oh, it kind of overshot the range there. And then had a significant pullback higher. Yeah, these things keep timing out. Not cool. Well, now's the question of where do we end the week? And where do we go from here into December? I think those are 2 important questions to ask, and I think we'll have a better idea after we get the economic data here in a moment. I'll go ahead and bring up. I was going through that SEB article and I found the major FX forecasts list there. But then I also found this policy rate forecast. And this pretty much lines up with consensus view. Yeah, Fed rate cut in May is pretty much priced in by most market participants. And then in the second half of the year, you're starting to see the rate cuts for all the other central banks. Best month in 3 years for global stocks. Look at that happy Santa. Look at that happy Santa. I bet he has some stocks. Best month for world stocks in 3 years. MSCI World Index. Man, a lot of stuff here. Let's see. I can't seem to find the ETF ticker for that one. I know an ETF for it exists. Maybe someone can help me out, get that ticker for MSCI World on TradingView. But yeah. Short term, nice little positive development going into the New York Open after the fall off from yesterday. Still was not expecting such a big fall off after those preliminary PCE numbers, but we're getting another round of those in today. Let's go ahead and check out Financial Juice here real quick so we can see those economic data points. USPCE, the month-over-month numbers, you can see forecast is for lower. We'll have to see if those forecasts get hit or we come in lower than forecast. Then the core PCE comes out, initial jobless claims also. It'll be interesting to see if that also ticks up as forecast. Canadian GDP forecasted to come in at 0, but we'll have to see. There's a particularly negative sentiment around the Canadian economy. Yeah. China, rising copper imports. So even though manufacturing in China is coming down, I saw this article saying, hey, you know what? There is a bump here in the amount of refined copper coming in, which is interesting. I wonder if that is a leading indicator of manufacturing, but you know, I'm no China macroeconomic expert. Capital spending on China's power grid, for example, has grown over 6% so far this year, outpacing growth. So maybe they're just doing some more electrical stuff. European LNG, a bit of analysis on that. Check this out. With the loss of the Russian pipeline gas, that dynamic has been turned on its head. In anticipation of winter scarcity, European LNG buyers now scramble for cargoes much earlier in the year to avoid being caught short. Sure enough, European undergoes storage facilities are now chock full, and the winter TTF price movements resemble those pre-2021. Well, almost. I'll just continue reading there. Soft demand is keeping Dutch TTF, European gas benchmark, below JKM, the Asian LNG spot price. Huh. So European LNG coming in lower than Asian LNG. So this is a whole technical report on LNG. There we go. Looking further ahead, US LNG netbacks are still higher in Europe than Asia. Well, throughout spring and summer of 2024. This gives further credence to the view that the restocking season is when the real fight for spot cargoes will begin. So next year might be particularly interesting for LNG, you know, given a recession doesn't occur. Nice continued movement higher going into these economic releases on the euro dollar, which is nice to see. Wonder how equities are doing going into this release. Oh, wow, check that out. yeah, if the economic data comes out, again, in favor of looser monetary policy, maybe potentially some pricing in for a first quarter rate cut, we could see the S&P trade at 45.80 sometime today. FMWO, let's see. Oh, well, that's the European MSCI World Index Futures. Let's see if that's the right one. That seems to be the right one. Let's look at it on the daily. Yeah, that is an incredible month. Look at that. Wow. Wow, wow, wow. 8% in a month. Really far out move there. Wonder how much historical data we got on this. 43? 43 quarters might not be that much data. But yeah, would not be surprised to see a bit more positive drift. Let's check it out for the week. Would not be surprised to see this thing pop up higher into end of the week and hit 95. Yeah, there could be some continued moves higher here for MSCI World. Yeah, it is one hell of a move. Remember, best move in 3 years. Best month for this index in 3 years. So equities and, in general, risk-on assets are loving it. I think Aussie dollar is doing particularly well, too. It's now at a new 3-month high. Would be a 4-month if it got up to this spot there. But it's having a bit of a pullback here. Oh, the yield spreads seem to be improving today. That's hopeful going into these economic releases. We're getting them in about 15 minutes from now. We'll go ahead and we'll turn on the financial juice squawk just before those announcements are made so we can listen to some commentary on top of this. Let's go ahead and bring up some interesting charts here with the probability pivot points. I was reading along some Westpac stuff, and they reiterated their target of 63.5 for the month of December. I was like, 63.5, that sounds familiar, because I was doing some of my own analysis here. And that's dead smack in the middle of this zone right here, where you have 38% of your highs seasonally that occur between that R1, R1.5 pivot for the month of December over the last 21 years. Good stuff. I haven't seen any other assets that have this kind of look for how high they can go as far as how concentrated the odds are from the seasonal data. Eurodollar. Very expanded pivots. Let's see here. What else is there? Some good analysis for the Great British Pound has come out. There's some more hope that we'll get a more bullish expectation out of the Great British Pound going into December. A lot of the expectations for a lot of these currencies is risk on from these outlooks. It could just be recency bias, right? But a lot of the forecasts are taking into account this economic data improving, relative strength of the rest of the G7 versus the United States improving, the likelihood of the Fed cutting rates first, those market pricing effects improving. Let's see here. What else can we check out? We'll have to look at the low distributions here for USD CAD. You do have a peak on your high up there. So if the Canadian dollar doesn't, if the economic data out of Canada doesn't perform well, I'd say the high 137s is not out of the question. But if we're going to go with this idea, with the recency bias, the risk on, yeah, those odds are not as significant or as distance-wise far away as you could get on something like that NZD USD. Wow. 28% of the time. Low for the month of December over the last 21 years comes in above the monthly central pivot. Cool. But yeah, check this out. I think from here to here, that's about 200 pips. That'd be nice. That would certainly be nice. Eurodollar just totally killed it this month. Now you have these very wide, expanded pivot ranges. I've seen 111 as the consensus forecast for Eurodollar by the end of the year, and that seems to be the top end of this peak in the high distribution for the month of December. I know B of A kind of made some news because they're projecting like 115, which is way up here. Crazy, crazy call. But we'll see how European data shapes up. 111 does seem like a reasonable spot. Let's see here. What else can we check out? We can check out the equity indices for the month ahead. Let's check out the NASDAQ. Looks like the mid 1600s or 16,000s. This spot right around here, but they ought to start to get pretty flat around this area, so got a bit of uncertainty there. More concentrated peak around this low, so I wouldn't be surprised to see a pullback sub 16 and then a rise higher again. I have this custom index here. You can see the calculation for it right here. These are the top 10 S&P companies weighted by their size in the S&P. Yeah. Quite a nutty move. It just went parabolic. Wow, what a crazy move for the top performing S&P companies. Well, for the largest S&P companies, the largest weighted S&P companies. Yeah, I wouldn't be surprised to see a pullback in this index sub, what's that, 2,700? And then the rise back up. But if the positive expectations continue to get realized into the month of December, this 2900 spot stands out to me as a particularly aggressive target. During months like this, where you just have this runaway crazy action, this does not fit typically how you get data for most months. This was the largest move in 3 years for MSCI World. For a lot of assets, this month of November was just absolutely crazy. And these sorts of outperforming months are just, you know, nutty, nutty, nutty. Really, really good stuff for guys who are holding equities, that's for sure. Happy to see that. Nice, and at least it gives some short-term memory preference to being risk on. I've seen a lot more outlooks talk about targeting 102 on the dollar to this 101, 101 and a half spot, which is actually right here at a peak in the distribution. But then this spot here, this little moderate bump stands out to me, which is at like, what, 100.6? And you know what? If you get another runaway month, like in November, if it just continues, really would not be surprised to see dollar trade below 101 in December. All right. Well, we got about 5 minutes until the economic data comes out. We'll go ahead and watch the euro dollar. And turn on the financial juice walk.
Range of 4% to 3.4% expected.
And he's already talking about expectations for these
Core
economic
PCE
events.
month over month, forecast 0.2%, prior 0.3%, with a range of 0.3% to 0%. Also get the consumer spending month over month, forecast at 0.4%, prior 0.7%, with a range of 0.3 to 0% expected. And the weekly initial jobless claims, forecast 218k on the prior 209k, with a range of 235k to 205k expected. For Canada, we also get their GDP numbers for the month of September, and also the Q3 annualized data as well, so quarter over quarter, forecast at 0.1% on the prior minus 0.2%, range of 0.5% to minus 0.5%, and Canadian GDP month over month, forecast 0%, prior 0%, with a range of 0.1 to 0% expected.
So it looks like the range of forecasts that he just gave give a little bit of credence to the potential for these forecasts, for the actual number to come potentially a bit under the forecasted number. So there's potential here for the numbers to become realized at better than expected here on these consensus forecasts. Because he'll give you the range, and then you look at the net range of that and you're like, huh, does that range skew one way or the other? Where's like the center point of that forecast range? And it seems like there's a bit of skew to expecting less than the forecasted number here in the consensus. That'll be interesting to see if that is the case, if that is realized. Again, nice positive movement going into the economic events here. And we got them coming in about 2 minutes now. So we can kind of sit back and relax, watch these things come in, and see if we get some risk on continuation. Just gonna patiently wait for these things to print. Let me know what you guys think in the chat. I'll be hanging out with you guys here. Again, nice to see you, Rich. Nice to see you, Fundin. Always nice to see familiar guys in the chat. Another active day. Another active day. Let's see how these forecasts come out. What kind of volatility we get on these releases.
1 minute remaining. I'll lead with the US PCE price index year over year.
Here we go.
Ten seconds.
Right, yields jumped.
Still waiting on the PCE numbers. Three percent as expected, month over month, 0%, 0%, lower than expected, 0.1%. Core PCE year over year at 3.5%, 3.5%, more or less as expected. Core PCE month over month at 0.2%, 0.2% as expected. Consumer spending month over month, 0.2%, 0.2% as expected. For Canada, GDP quarter over quarter annualized minus 1.1%, minus 1.1%. That's lower than forecast, 0.1%. With the month over month at 0.1%, 0.1%, higher than forecast 0%. US personal income month over month at 0.2%, 0.2% as expected. Real personal consumption month over month at 0.2%, 0.2%, higher than forecast 0.1%. Continuing claims for the week at 1.927 million, 1.927 million, higher than forecast 1.865 million. And the weekly jobless claims at 218k as expected. So looking to the markets here, just a bit of whipsawing in the S&P 500. A little bit of strength in the dollar as well, as we did see the US PCE numbers come in broadly as expected.
All right, so no major surprise.
We have posted out the US consumer spending October report on the feed for anybody interested.
Again, like the analysis yesterday, this does bode well for risk on assets. But just like yesterday, remember, we had that fall off. We had some dollar strengthening into these numbers, so it'll be interesting to see if we get follow through on this.
So treasuries are steady after the jobless data and personal spending data.
All as expected, Rich. Let's see how traders take the news. I think the dollar still has room to the downside. Yeah, I do as well. I would have expected a stronger
move. So it does
move.
appear the ECB has released the speech for ECB's President Lagarde as well. Scanning through, does seem to be on banking supervision as the main subject of the speech. Links on the feed if anybody is interested though.
Maybe I'll check that out some other time here.
We have also posted out the Canadian GDP September report on the feed for anybody interested.
Interesting how...
So looking at the reports, a breakdown for the US PCE numbers then. So the PCE price index X food, energy and housing is at 0.4%. And the US October PCE services price index, which is X energy and housing, is up 0.1% as well.
PCE, and then, yeah, excluding food and energy, also went down. So that's the core. Yeah. These are improvements for sure. Helps establish the negative trend in PCE for at least the inflation side of things. Yeah, not a super significant difference in the yield spreads here. I wonder if any other currencies have seen improvements. Yeah, dollar CAD not moving in the right direction.
We have also posted out the weekly initial jobless claims report on the feed for anybody interested.
Yeah, just a big whipsaw, a big top wick so far on the release. Big spike higher, and then significant pullback. Not fantastic. Not a fantastic response here. Yield spreads are much
So
more...
short-term US interest rate futures fall after the latest economic data. Also noting spot gold, little changed after the data there as well. So dollar's extending some of the strength that it saw after there, so it's up 0.35%. S&P 500 still mainly whipsawing, so it's still up 0.2% on the session.
Yeah, I think we're gonna have to wait and see how this thing follows through. Because these yield spreads, outside of, I'm looking at that Aussie dollar yield spread, that looks like a positive development. For the pound, also a nice positive development there. Again, looks like these assets are kind of struggling even with the good data.
Do you want to stay up to date with the latest and be on the bleeding edge of news for non-farm payrolls? Then sign up today and get our special offer of...
Sorry. Financial juice there. So yeah, not the reaction we were expecting off the type of data we got. That's kind of interesting to see. I really wonder what are the other factors that are being taken into consideration to move that price lower. Yeah. Again, on the daily, the yield spreads have not improved. They do seem to have improved on the Australian. Not so much on the New Zealand. Pound is holding in there. And the CAD? No, those positive yield spreads are in favor of the dollar, so this is definitely weaker for the Canadian. So Canada is kind of getting hit it's most likely due to this Canadian GDP number coming in worse than expected. Their month-over-month number came in positive, but their quarter-over-quarter annualized did not. So I wonder which one takes more weight. So we'll go ahead and full screen the charts. Yeah, not the most riveting price movement after that set of releases. Some positive developments, but seems like it's mostly in the Australian dollar, somewhat in the New Zealand, and the pound. Seems pretty mixed here on euro, and not so great for the Canadian dollar. Let's actually check out the Canadian dollar here. Let's look at some closing odds. I mean, I would expect us to end this week below the weekly central pivot, somewhere in this range, effectively sideways. Let's check out yen. Yen hasn't moved a whole lot since the announcements, since the releases. Might see a bit of a positive drift here going into the close on dollar yen. And my expectation, even with yesterday's data, was that we'd end up going sideways here on New Zealand. I'm in line with a lot of other analysts that I would like to potentially look at some dips to the lower part of the 61 handle sometime in the first week of December. Yeah. Possibly the US dollar has some strength going into the close here of the week. Even on the Aussie dollar. Yeah, maybe some more sideways action on the euro. Yeah, these are some pretty low odds. You get more of your closes around this spot right here. So I wouldn't be too surprised to see the pound dollar drift lower here. Yeah, this good data hasn't developed risk on, which is quite interesting. We can go ahead and check out the DXY. Yeah. Closes most of the time just above maybe this S0.5 pivot, so maybe it has a bit more positive drift into the close. Then you can see next week's closing odds are a bit more on the bearish side, so let's go ahead and check out some highs for next week. Yeah. Maybe you get your top next week sometime in the first couple of trading days of next week, and that would be a better opportunity for risk on traders who want to go short the dollar. Maybe that'd be a better opportunity. Really, Richard? Euro yen is catching some upside. Let's go ahead and check that out. Yeah, nice little positive development here. Yeah. We can go ahead and bring it up on the hourly. It is reacting well over the last hour. Nice move. It led up higher going into the economic events today. Did the rest of the yens perform like that? Nah, sort of. On pound yen. Aussie yens had a nice bump up here. And New Zealand yen doing well. Doing nice, nice, nice. Seems like Euro yen got most of the move. It's been probably the best performing yen pair today if you were buying going into these economic events. And CAD yen, well, it went up higher going into the events and started leading lower once the Canadian data came out with the US data here. And not the best performance out of CAD in reaction to the releases here. Let's go ahead and check out the equity markets. Dow going higher. S&P higher. And the NASDAQ kind of looks similar to those FX pairs. Some whipsawing here on the NASDAQ. The Australian stock market's higher. The New Zealand stock market is chugging along nicely. Wow, the UK stock market is really performing quite well today, huh? Really performing quite well. Yeah. Maybe we cross 7,500 today on the UK 100. Would not be surprised if we cross 7,500 today. I mean, we're pretty much there. We're only 3 points away here. Oh, the European stock market is improving too. Wow, what a tap right there at that peak. And there's still room to the upside if it's going to continue going higher from here. And maybe cross that 4,400 spot. Could be a very, very good day for equities today. Not so much for the currency markets, huh? New Zealand just holding in flat still. Aussie not performing too well, even though you can see the color here change to green. Positive developments on the yield spreads. That might have been an interesting spot to take shots on the long side for the day. And outside of this dump, Euro is holding in, it seems. Again, not as great of a bullish reaction as we might have wanted to expect. See you in a bit, London. But yeah, I don't think there's much else to commentate on. Either we're going to begin seeing more risk on continuation here in these currency pairs. I have better expectations that we'll see continuations in the equities. We did get some OPEC information, and that's led oil to have some extra volatility, but start drifting higher, continue moving higher here. I think there was a big US oil inventory buildup that was announced. Gold not holding. Well, gold is looking actually quite similar to euro dollar, if I may say. Looks quite similar. The fall off, the spike higher, and the retrace. Again, I would have expected a much stronger risk on move with that sort of data. So I'm kind of disappointed with the performance on the economic releases, but all said, it looks like the commodity space is doing all right. The equity space is doing the best. And currencies are just trying to hold in there against the dollar. They're just trying to hold in there. I guess now would be the time to ask if you guys want me to check out anything else on the chart. Yeah, we might have a repeat of yesterday where we had some pretty decent data come out. No follow through on the risk on response. And then today, some generally good inflation data came out. No follow through on the risk on response. We'll have to see how the rest of the day performs. But net, not what I expected. Yeah, you can see it's continuing to fall here. Alrighty, you guys. I think that's gonna be that for the stream today. I got not much else to give as far as commentary goes outside of that. But I'll be here tomorrow. We're gonna be getting some European PMI data. And we're going to see how that moves things tomorrow. And with that said, wish you guys all the best of luck. And I'll see you guys in a bit.